Most Canadians think that loyalty gets them the lowest interest rate. They'll say things like, I bank with them forever and they'll take care of it. But as someone who's worked in one of Canada's largest lenders and helped thousands of people a year with their renewal, I'm going to tell you the uncomfortable truth that loyalty often does the opposite. In this video, I'm going to show you how banks actually look at keeping you as a client. I'm going to help you understand how the renewal system actually works. I'll also show you why people can't understand what rates are being offered in the market. And I'll also tell you what I would do if my mortgage was coming up for renewal today. So let's get into the first part. This is the trap that most Canadians fall into. I call it the loyalty trap. Most customers, they feel this emotional tie towards loyalty. And that's because loyalty in relationships are highly valued. Here's the problem. The lender isn't looking at this as a relationship. The lender is looking at this from a retention standpoint. And so the bank's goal for retaining you or keeping you is so simple. The banks want to charge you the highest interest rate they can while still keeping you as a client. Here's what banks think. They think that the more connected you are with their ecosystem, the more you have bank accounts, investments, car loans, etc. with them, the less likely you are to leave. It's why we've seen a rise in offers of these types of products at renewal. There's lenders that are actually mandating you doing this in order to get a lower interest rate. And the goal is to keep you in their ecosystem for long. And so why do they do this? They essentially do this with one goal in mind, to be able to keep you when your mortgage comes up for renewal. And this is what I want to take away. If you walk away with only one thing from this section, it's this. And lenders do their pricing based off of how likely you are to leave. That leads me right into this next section. So when I worked with one of Canada's largest lenders, there was one stat that came across that I think everybody should know. And we called it the 68% rule. The common wisdom that gets put out into social media is that most people negotiate their mortgage wrong. And that's not actually the case. Most people don't negotiate their mortgage at all. 68% of people is what we had internally that never called in to talk about their mortgage at all. They'd receive the renewal paperwork, they'd sign it, and they'd send it back. And look, I've been in these meetings. The push was always to offer higher interest rates up front and then be able to negotiate once people actually called in. Meaning just calling into your lender would get you a lower interest rate, even if you didn't compare anywhere else. And when I say that, I mean people who renewed without calling in multiple times often didn't even get assigned to the renewal department. If they happened to call in 3 or 4 renewals down the road, they would just get the general customer service. And that meant they didn't even have access to the rates that we had available. So even if they were to call in as a consequence of this, they would pay higher interest rate. So that's 68% of people. Now, what about everybody else? Well, the first thing that people do is they'll see rates being advertised online. And the honest truth is banks advertise rates that nobody gets. And you might think that I'm saying that the rates are actually lower than what you can get in person. And it's actually the opposite. Banks advertise rates on not only social media, but also on their website for something completely different than trying to get people in the door. In actuality, it helps them get a larger penalty from you if you're to leave. I made a full video. I'll post it here, but you can find it on my channel as well. But here's the honest truth. A lot of people compare what they get at their renewal from what's posted online. And because the renewal offer is lower, they sign. But you shouldn't be doing that because nobody actually gets those rates. So if I was renewing my mortgage today, what would I do? The very first thing, and this is the part that a lot of people skip, you need to make sure that you're comparing rate to rate. So I'm finding out what's important to me. If I need a line of credit, if I need to refinance, if I might be selling in the next 5 years, if I don't want to pay a large penalty, all of those things need to be factored in first. Then I want to go to my original lender. So the one who currently has my mortgage, it's coming up for renewal. And I'm going to tell them this. Look, I'm shopping around. Whether that's with another bank or a broker, that's up to you. Now, I can already hear what they're going to say. They're going to say, that's amazing. Great that you're shopping around. Send me whatever they offer you and we'll try to match. But here's what you should do. You should say no. I'm going to tell them to do the same. And whatever rate's better, that's where I'm going to go. And here's the reason why. Most people negotiate backwards. and they are probably going to match it. But you might have missed out on them giving you a much lower rate than anyone in the market could get. So in order to do that, make sure that they're offering you a rate up front. The next thing I'm doing is going to the bank or the broker, and I'm doing the exact same thing. Hey, give me your best rate up front. Whether it's a bank or a broker, make sure that you're getting the best rate that you can. And here's the mind shift. You don't want one bank negotiating with another. You want both people to negotiate against losing you. That's how you get the best rates in the market. Again, I just want to emphasize the importance. You want to negotiate apples to apples. So if you need a line of credit, make sure both products have those things. Get the penalty structures if that's important to you. Figure out what it is that you're looking to do and make sure you're comparing those rates side by side. Now, another trap that people fall into is the cashback trap. And often this is what you see when banks can't match your rate. They'll offer you the potential to give you cash back on the side to make up the difference. Here's the problem. Almost all of these cashbacks have clawbacks, which means you have to pay back all or a portion of that money back to the lender. On top of that, you have to pay a higher penalty because your rate is higher. So it's a double whammy if you're going to leave halfway through. And this is why sometimes that cheaper money can actually be more expensive. So the cashback trap is something that I would avoid. And the honest truth is that most Canadians think that loyalty rewards them, but it actually rewards the lender far more often than it rewards you. Now, I've broken down quickly how I would negotiate. If you want more of a deep dive of what I would do and step by step, I made that video here.